What's going on, everyone? My name is Anthony, and in this video, I'm going to be doing a quick update of the broader markets as well as some specific stock picks that look good for puts at the moment. So right now, in the markets, we've been doing a solid impulsive move structure. So that means we went up for a 1 here, a 2 down, and then a 3 up. So now we're consolidating and correcting for this fourth wave. And what this means is if I zoom in on some of this technical analysis here, let's go down to the 5-minute time frame. We're looking really close at this fourth wave. And so over the past 2 weeks or so, we've had really choppy price action. And then we finally got that decisive drop that we've been looking for in the markets. And now we're looking at how to play the reaction to this drop and how I anticipate that there might be some more downside coming to this correction. So specifically, if we break down what's happened so far, we can see that when you correct, you form something called an ABC correction. So that just means you go down for an A wave, up for a B wave right here, and then down for another C wave, as so right here. And within this ABC structure, this B wave also has an ABC structure. So what I'm seeing as a possible scenario to the markets right now, and I'm looking at SPY, which reflects the S&P 500, we see an up move for the A, a down move for the B, and then a possible up move for the C. So this is one possible scenario that I see that's probably the most likely of occurring. One other situation that could also occur is that we just completely ignore the subdivision of the ABC structure, and we just start this as the top of the B wave, and now this is the start of the C wave downwards. This could be a possibility of what's going on, but if you want to be extremely safe and careful about where you enter on puts, I would highly recommend waiting possibly when you get up here to these levels. Once you get up here, then you know you can start shorting, especially if you start seeing some downwards momentum. So the price trajectory that I would prefer to see would be, so we come up here and then we kind of bounce towards these levels. And then when we start seeing this reversal, so right around this area, when we start seeing this reversal, this is the perfect time to get into puts. And you don't have to get in puts on just SPY or the triple Qs. You can also get into it on a list of stocks, and I'm going to go over those in this video. So that's my technical analysis for SPY currently, and I'm looking for this really good entry over here around these technical levels for puts on the market. So next, I'm going to go over the triple Qs, which has essentially the exact same price movement and technical analysis. But in general, what we see, if I get rid of all these structures here, we have a 1, 2, 3, and we're coming down for a fourth wave correction right here. And then in the future, after we're done with this correction, we're going to come up for a fifth wave to finish off this bull market run. But for now, we're focusing on just this smaller time frame correction. So if I zoom in on that, let's go to the 3-minute time frame. And so same thing as SPY. So we do have an A downwards and then a possible B upwards right here. And I also tried subdividing this B wave as well. And then we're coming down for a C wave, which is what I'm targeting with puts. So as I wrote here, the best entry for puts would be if we come up for the C wave of the B wave, and then we start going downwards for that C wave. So we want to capture this entire move downwards for the C wave. So I'm looking to maximize the entry with waiting for a possible push up to the upside. However, if we start, so say we start sinking downwards over the next day or so, or a couple days, then we'll know that we've officially started this C wave. And then you could start trying to get into puts. And at that point, I would start taking some fib retracement levels, which I can do right now. So to get a sense of where entry would be, we take the extension levels of the A down to the bottom of the B wave, like this. And so some technical stopping levels would be right around here. So the 0.786 and the 618, that's where we would expect to see this huge reversal and then kind of like stalling here and then just crashing downwards another time. And that's what I expect to see. If we don't get that, then we can start targeting what the C wave downside would be. So this is the scenario where we have this as the top of the B wave, and now we're just going down for the C wave. So we ignore all these subdivisions. Then in that case, we would start around here, drag it to the bottom of the A wave, and then drag it to the top of the B wave. And then we will start getting some levels. And I want to be very conservative on the move downwards because C waves of fourth waves can be truncated very frequently. And these stop around the 0.618 levels and the 0.786 levels. And when you're finding the possible ending levels of C waves, you want to look at where previous price action has been within the wave. So to do this, I'm going to get rid of all these drawings for now, and we're going to look at this area. So this is, like I said previously, the wave 1, 2, 3, 4. And as you know from Elliott wave theory, we cannot cross into wave 1 territory if we're correcting for a wave 4. So I want to watch out for this level. So this is right around 323. So if I look at this closer, let me go back to the 5-minute time frame. So that 323 level right here seems to be right around our target zones. So this looks like a really high probability zone of stopping on the way downwards for the wave C. And just like I said, 323 is a really good area to take profits on your puts if you do enter around these areas. So that's going to be pretty much the broader overview of the markets. And if you want to play it safer, I'm going to go over some specific stock picks that look really good for puts at the moment. And this means you don't have to really try to time the exact upside of the markets, but rather you can get in on a later time or whatever time. You don't have to time it perfectly. So my first stock pick on that list will be PayPal. So specifically for this stock, we're also doing an ABC correction. But when you have such broader market cap companies such as PayPal, you can really see a very clear subdivision of this wave, which makes it really easy to trade. So over here, we have the very top of the price action, and we have the start of the A wave, and that forms a 1, 2, 3, 4, 5. And then we come upwards for the B wave, so an A, B, C upwards. And now we're starting that C wave downwards. And I've already drawn out some price levels and targets. So I'm really focusing on getting in on some of these impulsive moves on the downside. And I'm looking for this push upwards. And right when you get to these levels, so around 257-ish, and I can show you how we get those levels. So we take the retracement of the third wave length, and we see that we get around the 382 levels. That's a very high probability zone of stopping on the fourth wave. So I'm targeting 257 for entry on puts into PayPal. And you can start getting into position around these levels as well. So 253, that looks like a really good zone. In addition, there's some resistances here that will help push price movement downwards. And PayPal has earnings after hours today, and I don't think they've been released yet, but when they do, I'm very curious to see what the market reaction will be. And I'm quite hoping that they either do push a little bit upwards, because that would present a really good opportunity to get in on this fourth wave. However, because this is the third wave, we can keep pushing downwards and downwards and extend furthermore. But if you want to have the safest entry point on PayPal, you would want to wait for this wave 4 upwards and then ride the whole wave 5 downwards for the C wave. And depending on where we stop for the fourth wave, we can establish some basic areas of stopping for the fifth wave. So say our fourth wave ends right here, so 257, then we would see, oh, actually PayPal just released their earnings as I'm speaking this, and it looks like they are falling pretty hard. So in that situation, as I'm recording this, they actually just tanked earnings. So then we would move the third wave, like I said, right around here, and we would also have to just wait to see where it opens up tomorrow. But when you do find this third wave retracement, you want to look for the fourth wave entries on puts. You do not want to enter on the bottom of the third wave. You want to wait for some kind of push upwards. And I guess we're kind of getting some volatility in the stock. So I'll wait for what the market reaction is tomorrow, and then I'll post some signals on the Discord. And so actually I'm going to add this quick clip while I'm editing this video. So this is a couple hours after what I was talking about previously. And now for PayPal, after the earnings reaction has stabilized, now we're sitting at 258. So this is just to emphasize the point that if we had tried to get greedy and catch this third wave and hope that there's more downside, we would have gotten absolutely screwed by this earnings release. And it's most likely going to open up at this level right here. So as you can see, it's right at the 0.382 level. So this presents a really good buying opportunity for puts now, and I'm definitely looking into that in the future. So yeah, this is just why you don't get greedy with earnings. And you can see it had a really strong reaction to earnings, and that leads perfectly into the fourth wave. So now I'm definitely targeting puts for PayPal. This looks like a really solid trade. So Apple here, I've already talked about this in Discord a lot, how I'm very bearish on the stock. and I'm looking for this signature impulsive move downwards for the C wave, and we've already started to get that move downwards. So actually in the Discord, we played puts on this move downwards, and we were able to make some really good profits. And I exited out of my positions because I'm anticipating this slight bounce, and we did get that. So we got a slight bounce in Apple, and we took profits before this happened. And now I'm looking to re-enter my position on puts for Apple, and that will be targeting just this third wave move downward. So that's a large chunk of downside to be profited from, and I'll be looking to post some signals in this in the Discord once I confirm that market conditions are bearish. So that's a bearish recommendation for Apple. And next on the list, I don't really have too many other stocks that I'm very, very bearish about, but Cloudflare is on my list, and we've already started to get some impulsive move downwards, like I've been stating in my past videos. And this is also forming the exact same type of correction. So we see an A, B, C move to the downside, and right now we're in that C wave move downwards, and we can expect to see some kind of impulsive move structure when we're correcting like this. And we've started to get that, so I haven't really labeled too much of it yet, but I do see more downside to the stock. And I also want to enter on puts when we do get some push up to the upside, because we haven't seen that quite yet. So you don't want to enter on puts and then have it go immediately against you. That's just going to be really annoying to deal with. So if you're entering on puts on stuff like Cloudflare, you can start cost averaging in. So you enter like a couple contracts at these levels, and if it goes down, then you make profits and you can probably take profits. But then if it goes against you, then you can keep adding into these positions at specific Fibonacci retracement levels. So you would just keep adding along most of these levels. So maybe if I zoom in on these, you would add in on the 0.382, the 0.5, or the 0.618 levels as it goes up. And that's just the situation. If we do actually go up, there's a chance that we could keep going down. There's a lot of volatility with these stocks right now because earnings are being released as I'm speaking right now. But yeah, I wanted to not get into options before earnings because, as you know, implied volatility drops heavily after earnings are released. So even if stocks tank after earnings and you're in puts, you might not be able to make profits just because of the sheer amount of money that the options lose from that earnings release and that implied volatility drop. So I'm definitely looking to enter positions after all these earnings are released and the continuation of this bearish move to the downside. So that's going to be Cloudflare. And just some quick updates on other stocks. I did have GE on the list as something that I was bullish about, and currently this is actually doing very well in the situation of the bearish markets. And this is not a very volatile stock, so I see this as a very safe stock pick. And in terms of just, we've had some really big downside on the markets and really harsh swings, but GE has managed to kind of stay above it and not be too hit by it, and it's been pretty consistent. So that's just an update. I'm still bullish on the stock, and it seems that we're just kind of chilling at these levels while we wait for the markets to finish correcting. And same thing for AstraZeneca. This is another stock recommendation that I had, and these are all very stable stocks, and we can see that this had actually a very good reaction to the market downside recently. So this is still doing really well, especially with the market conditions. So I'm still very bullish on the stock, and I do see upside coming in the future. So that's going to be it for this video. That's just some quick updates on the markets, as well as some specific stock picks that I'm bearish about and others that I'm bullish about. And thank you for watching, and I'll see you in the next video.